So apparently this guy posted on Reddit that he inherited 7,000 shares of Apple from his grandfather. So I thought it would be interesting to talk about what I would do if I were in that situation. So 7,000 shares at the current market price of Apple of $4.97 is about 3.4 million. So first thing I would check is, I know Apple does pay dividends. It was paying dividends. So first thing I would check is, did my grandfather use all the dividends, or are the dividends still left in the account? So that was just a joke. All right, so to help me decide, I'd have to ask myself first, what is my goal with this money? Do I want it to grow, or do I want to generate income for me so I can live off it, so I don't have to work anymore? So if I have other sources of income and I enjoy my job, maybe I could just leave it, ignore it, let it grow, or maybe sell it and buy a different investment that will also grow. But generally speaking, my goal would be, definitely if I inherited 3.4 million, my goal would be to try to make sure that it generates enough income for me so that I can live off. I don't have to work anymore, and I could do pretty much what I want with my day. So basically have my freedom. I mean, I wouldn't be selling it and spending from the capital, because eventually the capital will disappear. I'd want to make sure that the capital is preserved and is actually generating some sort of income for me. So Apple does pay dividends. So if we look at dividends, you could see here that it's paying $3.28 per share. So if I have 7,000 shares, that gives me about $22,000 per year, or $1,900 per month. So if $1,900 a month is enough for me to live off, then maybe I don't have to do anything. I can keep the Apple shares as is and just live off the dividends. Now, if that's not enough, what I could do is maybe sell some covered calls on Apple shares. So if I go to options here, as long as I have a multiple of 100 shares, I'm actually capable of selling a call option against my shares. So if Apple's trading at around $4.99 or $4.98, I could sell a call option every week. And if my goal is to keep the shares, then I could pick a strike that's far out of the money. So for example, for August 28th, I could actually sell a call option at, let's say, at around 600. Now the consequence of selling a covered call against my shares, or a call option against my shares, is if the stock happens to trade above my strike at expiry being August 28th. So if it happens to trade above my expiry of 600, for example, then I'm forced to sell my shares at that strike. So it's just a matter of picking a strike that I think has a good chance of not getting surpassed. I mean, if Apple's at 500, what are the chances that it reaches 600 by the end of the week? So 600, I'd be able to collect 74 cents per multiple of 74 cents per share. That's just in 1 week. So if I've got 7,000 shares and I'm collecting 74 cents, multiply that together and I get $5,000. So if I keep Apple shares, keep the dividends, and sell a call option every week, or a covered call every week on my shares, I can make an extra $5,000 a week. With this example, if I pick the 600 strike, if I go to 650, I'll make a little bit less, but I pick a strike that's even safer. I can come a little closer. I can sell a 550 covered call, collect $2.15. So 2.15 times 7,000, let's see what that gives us. $15,000 a week just by selling covered calls on my 7,000 shares of Apple. Now let's look at September 4th week. We can go to 700 strike and collect 53 cents, but we have 2 weeks to go. So if you really think that Apple isn't going to go from $4.99 to 700 in 2 weeks, then this could be a pretty safe strike to sell a call option at. But that's the idea. If you want to keep your shares, you want to pick a strike that does not get surpassed, and in the case it does get surpassed, you can always just buy back the call option and sell the next week's call option. And the combined transaction, hopefully you can do it for a net credit. So that's probably something I would do if I keep the shares, if I want to keep the shares. Now, if I want something more passive where I don't have to actively go in and sell a call option every week, what I could do is look for dividend stocks that pay a better dividend yield. So 0.69% per year is not amazing. I mean, savings accounts can give you 2% per year. A Tangerine savings account will pay you 2% per year, or 2.5. EQ Bank pays you 1.7% interest on every dollar. So keeping shares for the 0.69% dividend is not amazing. You would only be keeping it for potential future growth. But who's to say that it keeps going up? It has already gone up a lot. And what if we go through a bear market in the next 3 or 5 years? Maybe I would sell it and buy TD stock, pays me 5% per year. So if I've got 3.4 million and I'm getting 0.05% per year on 3.4 million, that gives me about $170,000 in passive income in dividends per year, and per month that gives me $14,000 in dividends just by buying TD stock. Plus TD increases their dividend year after year. So if I'm making 170 the first year, I'll probably make 10% more the next year. So maybe almost $180,000 or $185,000 the next year. Maybe I don't want to put everything in one place, so maybe I would take my 3.4 million, maybe divide it by 10 and buy 10 different stocks with that paid high dividend yield. So maybe a bit of TD, maybe some McDonald pays 2.38 and has a good dividend growth and usually is a recession proof stock. Maybe buy some Coca-Cola, 3.46% dividend yield. And going back to McDonald's, I could also sell some call options once again. So if I have a multiple of 100 shares, I could sell call options against it and collect premium extra income. And for example, if McDonald's at 211, I can sell the 220 or 217. Won't be collecting as much as Apple. Apple is able to go more than 100 points away and still collect some decent premiums. So personally, I would probably separate it into 10 or 15 chunks. Leave 1/10 or 1/15 in Apple shares. I would definitely not leave everything in one place. Leave a bit in a high interest savings account. Buy some other dividend yield stocks like McDonald's, Coca-Cola, TD, Canadian banks, Canadian insurance companies. And then I would leave 1/10 or 1/15 of the 3.4 million to sell weekly options with. So put spreads on the SPY, out of the money calls, out of the money puts. That would be more for fun, just to stay engaged in the stock market, and it would, because it's something that I enjoy. But definitely the passive income generated from the other stocks would be sufficient to live off. I could maybe buy some SPY ETFs, which is the ETF that tracks the S&P 500. So can't get safer than that. It pays a small dividend of about 1.85%. So better than the Apple shares, but of course it doesn't grow as fast as Apple. And I could also sell call options against it. So covered calls against my shares. So if I look at the August 28th expiry, if I buy the stock at 339, I can go maybe to 347. If I think 347 is safe, I can collect 20 cents. So let's say I take 1/10 of 3.4 million, which is exactly 340,000. So that gives me about 1,000 shares of SPY if it's trading at 340. So that gives me 1,000 shares. And if I can collect 20 cents per week by selling call options against it, that's $200 a week. So I'd go ahead and sell, maybe leave 1/10 in Apple shares, take the dividends, sell some covered calls against them for sure to increase the income, because my goal is to generate income. And then look for other dividend paying stocks that have at least 3% dividend yield per year that haven't fully recovered from March 2020. And then I would leave a small amount to trade options on a weekly basis just for fun. Play earnings, do put spreads on the SPY, sell out of the money calls and put options. So let me know in the comment section below what you would do with $3.4 million of Apple shares. So I'll leave a link to EQ Bank below if you want to open an account and take advantage of their high interest savings account. Also, I'll leave a link below for Questrade if you want to trade or invest on the stock market. It gives you $50 in free trades. Thanks for watching.